And I think the Chinese leaders obviously have a grip on the economy. They have a lot of ammunition, not unlike, Yellen and Draghi, who have basically shot it all, and now they cannot push interest rates into more negative territory. But there's something else, of course, in the stock market, and I think the Chinese investors are finding out to their detriment just how democracy and how the financial markets work. They've never been used to investing in stock markets.
The most significant results encountered for this Canadian mining region in over a decade. With a Canadian Mining Hall of Fame legend at the helm for more discoveries statistically than 1,000 geologists combined, this is the one hard asset stock to research right now. Learn more at crushthestreet.com/hardassets.
Hello everyone and welcome into crushthestreet.com. I'm joined today with Carlo Civelli. He's a one-of-a-kind investor and he's participated in dozens of companies and many startup companies that had market caps under 25 million that went on to become billion-dollar giants. It's rare even to have this happened once in anyone's lifetime, and this guest has had this happen and repeated it a dozen times. He is an anomaly, and his insight on the economy and profiting is unparalleled. So I'm going to enjoy picking this man's brain today. Carlo, thank you so much for joining me.
Well, thank you, sir. It's a pleasure. I'm up in Vancouver actually right now. Came back for a trip to meet my old friends and see what's happening in the markets. Happily to report that the market looks a little better.
You know what? The market does look a little better, and it looks like it's actually addicted to central bank policy. And we have Japan going in the negative territory for interest rates. Mario Draghi has released the bazooka of stimulus with the ECB with more QE and lower rates. But let's start our conversation here in the U.S. What are your thoughts on the Fed's indecision to not raise rates as originally planned, which all happened this week?
Yeah, I think I cannot contribute much to this, of course, other than what's happening or what's being written in the newspapers. We were always of the opinion that they would not raise it now, probably only in April. And it probably goes to show that the economy is not as strong, or the markets were too volatile, even for Yellen's stomach. And so she agreed to just postpone it. But obviously, I still believe, and everybody else believes, that we will have 2 or 3 interest rate hikes this year. And that should actually help the U.S. economy, I believe.
Interesting.
And at the same time, as you said, Mr. Draghi shot his bazooka, and funny enough, or strangely enough, the euro went up.
Yeah.
Probably to do also with Yellen not having increased the interest rate, and of course some traders must have been caught short. Like we, for example, at this stage are short the Swiss franc against the euro, because the Swiss franc is obviously still overvalued, and the Central Bank of Switzerland is also pursuing a negative interest rate policy.
Sir,
in other words, if you remember, the Swiss Central Bank has a negative interest rate of 0.75, so you're paying the bank 75 basis points to keep your money there. And therefore, people even go to the extreme of buying a Swiss franc bond, government bond, with a negative yield of, say, 35 points, which makes them still up 40 points. It's getting ridiculous.
You know,
sorry that I interrupted you.
No. I guess I interrupted you. I apologize for that. But you know what? It is getting ridiculous, and we are seeing unprecedented events. And when you consider that we have negative interest rates around the world, we can only imagine that unprecedented and unexpected events will follow as a result, because we can't compare this to any other time in history. Are you concerned about these negative interest rates and this endless stimulus that we are seeing around the world?
Absolutely. I think, as I pointed out in earlier interviews, nobody, not even the central banks, knows how this is going to end. They keep on pumping money, and the consensus, obviously, in a situation like this would be that gold has to go up. But as you can see, yes, it has rallied from the 1,050. It has rallied $200, but it's all driven again by the ETFs. Nothing has changed in the face of physical offtake. It's still the same. So I think my question back would be, what else do we do with the cash that we have? Everybody I talk to holds unprecedented cash positions and doesn't know what to do, is scared. So the only way out right now is to play the stock market.
Wow.
And then, as we can see in January, February, if then something unprecedented happens or something that was not in the cards, and the markets go wild, of course. I think we're in for a good period now. I think that the market is coming back for, more importantly for us, of course, as resource investors. The copper price is showing really good resilience, and the tin market could be going into a negative situation, negative supply. So a lot of things are moving well, and therefore also the stocks of the resource companies, the diversified resource companies, have actually done very well in the last 4 or 5 weeks. Probably about time to take profits, but they could run later on again.
You know, you're absolutely right. And talking about what happened this week with the Fed's decision not to raise rates, we saw the resource market take off pretty substantially. The HUI, from its low in January, which was about 2 months ago, is up around 80%, and the resource market has popped. So my question to you is, what is different about this time around with what we're seeing in the resource market?
I don't think there's much difference. It's really a difference in mentality. As you could see, February was really the washout month. I mean, everything was being dumped. I mean, I'm coming back to my old favorite, for example, Hudson Bay, that we've been trading very well, I must admit. And we bought it below $2, US, and it's doubled. And so have a couple of the gold stocks. So I think they were just totally oversold. Everybody had sold whatever they wanted, and then once it's washed out, it's very easy to take them back up. And definitely the mentality, as I just mentioned, with a copper price at $2.28 today, that looks a lot better, of course, than 2 months ago. And the fear about China has abated. I think the Chinese have done everything and are going to do more to stabilize their stock market, not so much the economy. I think they're on the right track there. And we will have to live with lower growth rates in China. But I think they're on the right track.
You know, in a recent interview you did with Future Money Trends, you shocked us by telling us that you own one exploration company out of the thousands that are out there. So I'd like to actually ask you about this and see if you would share a little bit more about this company for our audience here today.
Well, sure. This is actually one of the reasons, of course, why I am in Vancouver. It was to meet with Calinex Mines, which is the exploration offspring which was spun off from Callinan Mines when it was taken over. Then it later was taken over by Altius. And I think, as I mentioned before, this is, to me, a very exciting play. It has a long way to go. It needs a lot more drill holes, that's for sure. And therefore, it needs a little more money. And that's what we are here for. And other investors, as you know, Research Cap came in last year also with a big chunk of money. The management is still outstanding. I cannot say anything else. I went through a technical presentation just now. And the next drill holes will confirm good grades, not as big as we would hope to make it yet a big resource, but they are on the right track. And I'm very happy to report that 2 years ago, when we all decided to concentrate on the Flin Flon area around the old Hutt Bay minings, that was certainly the right decision. And there could be a giant mine up there that everybody's missed.
Mm-hmm.
So, as before in my career, it's going to take time, it's going to take more money, and hopefully we will find that giant.
You know, in every case, in every successful company, it really does come down to the people running it. And I got to ask you, I mean, you guys got guys like Max Porterfield, Mike Milzowski, and others. So have you seen a team like this before? And what are your thoughts on this management? You really do have some anomalies on this team.
Yes, that's true. You know, my connection with Mike Milzowski, of course, goes back to 1984 when we started Grangas together. We financed it out of Europe at the time. It went on to become a $25 stock. They found, I believe, 3 more mines. And Mike must have found, I believe, 14 or 15 mines in his lifetime, and is still here in the office and still active and contributes, of course, with a lot of his experience. But as we have seen many times over the years, if you have an exploration company run by a geologist, he's going to run it into the ground, because the geologist, all he wants to do is to drill and drill and drill. It takes mining people and it takes corporate people to then focus everything on making it a successful mining company. And that's certainly, Max Porterfield is outstanding. We were lucky we found him. And he's accepted the job up here in Vancouver, and he's running all over the world, doing his job. And as I say, I'm very, very happy. This is an outstanding management team, and it comes back to the 3 Ps, which is the people, the property, and the price. Right? The people are right, the property is very good, and the price of the stock is still right, because it's one of the very few exploration companies that has been holding up and was not crushed in the recent sell-off. So it shows that a lot of people do have belief and are actually sitting there quietly accumulating the stock for the long term.
Yep. Yeah, there's been a lot of resilience, that's for sure. So with ore grades collapsing and even some mines being depleted, there's some serious upside for these mining companies. And so I want to ask you, are there any potential game-changing events that gives Calnex some near-term upside in as far as for potential investors?
Well, I think the market has not really consolidated enough yet. I mean, everything went down, but the biggies, of course, are bouncing back. But they're all very, very busy still selling off assets, because they all, in the binge of the economy expanding in the last couple of years, they all went into debt. Look at the bad example, Glencore, which has $30 billion in cash, in debt, and is obviously trying to run it down, and their stock collapsed by 70%. So there's a lot of mines being closed, and that will undoubtedly in the next 2 years reflect itself into the market, into the mining market, in the sense of the commodities themselves finding a better balance between supply and demand. And certainly February was the time to go against the trend. And as one famous investor once said, when there's blood in the street, you have to buy. And that was certainly the moment in February. And I think that, as I said, the undertone of the mining market, the resource market has changed. It's probably a little ahead of itself right now, but it's building a base, and that's what all my friends up here in Vancouver confirmed to me.
You know, sir, you are an anomaly, and you've been a part of a lot of successful companies. So it's very interesting that you are a part of Calinex, and this is the one exploration company that you own. So I'd like to transition over and talk about China. You already mentioned it, and you said that China started off the year in the headlines, triggering major market sell-off. Do you anticipate China continuing to slow down going forward and triggering more global uncertainty?
It depends. On the economic side, I think they are definitely retrenching. They're not going to have the growth rates that we were used to, and which fueled this whole boom all over the world, particularly in commodities. But, even if it grows at 5 or 6%, that is still very, very good. And I think the Chinese leaders obviously have a grip on the economy. They have a lot of ammunition, not unlike, Yellen and Draghi, who have basically shot it all, and now they cannot push interest rates into more negative territory. But there's something else, of course, in the stock market, and I think the Chinese investors are finding out to their detriment just how democracy and how the financial markets work. They've never been used to investing in stock markets. They did it last year. It doubled, which of course attracted then all the masses into the market just at the top, as is usually the case, and then it collapsed. And so now you have a lot of disenchanted investors, and they will have to learn to live with this, like we have been living with this all our lives. But I think that they will come back, and the Chinese, as I say, have all the money in the world to stabilize the market. I think the worst is over, definitely.
Sir, we've been talking about central planners, and I want to ask you about currencies. The dollar is down to 5-month lows. Are you concerned about certain fiat currencies more than others because of all this central bank madness?
No, not really. I think the dollar is down because it was just overbought. Everybody, of course, was expecting interest rates to go up, and therefore, as a coincidence, the euro should have gone down. Well, it didn't. And that is the usual thing that happens when everybody anticipates something to happen. It always goes into the wrong direction. So I think that the dollar will stabilize again, will rise over the rest of the year. And I can certainly see the emerging market currencies starting to stabilize too. Except maybe for Brazil, where everything is still up in the air. But generally speaking, I think also the Southeast Asian currencies should be stabilizing and improving a little bit. But my bet is still on the dollar.
So, sir, in conclusion here, what is the most important piece of advice that you have for people here in March 2016? Well,
just stay on your toes. Watch developments daily. But take a long-term approach. And, do what we did. If you own good stocks, don't necessarily sell them. Just go short an ETF, for example, that covers the risk in the market in general. Because unfortunately, as we have seen in January, February, when the market goes down, everything goes down. There's practically no stock was able to go against the trend. Therefore, even if you own the good stocks, they will go down in a market correction, but then you have to just cover the risk in the market in general. And as you can see, the ETFs are becoming more and more important, more and more interesting to investors, because it's much easier to trade a trend than to trade individual stocks.
Well, everyone, that's Carlo Civelli, a legendary investor. Sir, thank you so much for coming on the show and taking the time to share your information, your research, and just your decades of knowledge with us. It's very much appreciated.
It was a great pleasure. Thank you very much. All the best to you.